All right, in chapter 6, we're going to start talking about merchandise inventory planning, so you can plan for what you need to buy, and valuation, so you know how much you have, what it's worth, what your inventory is actually worth. We know we need to keep track of our inventory, so we know what we have in stock, what we can sell, what we need to order, all of those things. Merchandise inventory is, in its simplest terms, just a list of everything that we have available for sale. Merchandise is things that are available for sale. The introduction talks about computerized inventory. Obviously, in this day and age, it's all going to be on computers. No one's going to do it by hand. The main advantages over handwriting this is that obviously it's more accurate. We're not going to misplace things, and it's more up to date. Our inventory can be tracked by the second, by the minute, as opposed to only when we go in and do the books. So when it's on computer, everything is extremely up to date. All throughout the month, the quarter, the year, whatever it may be, we're constantly buying and selling merchandise, okay? So whatever we start with at the beginning of the fiscal periods, our beginning merchandise inventory, throughout the quarter, throughout the year, throughout the month, we buy more stuff. So these two get added together, and that gives us the cost of merchandise available for sale. Everything that we have that's available to be sold, so all of our merchandise in stock on the showroom floor, in the warehouse, that can be purchased. That's what this is. That's how much does that cost us, okay? The total cost of the merchandise available for sale. Now, at the end of the month or the quarter or whatever, we divide this into two parts. The ending merchandise inventory, so this is whatever stuff we still have left to sell, and the other part is the cost of merchandise sold. We want to know how much, if we sold 1,000 pens, we want to know how much it actually cost us, those 1,000 pens. How much did we pay for it? How much money do we have wrapped up in it, okay? Excuse me. So the two parts are the ending merchandise inventory, which we have left over, okay? These are current assets that we're going to use in the future, and then also the cost of merchandise sold during this period, okay? How much we spent on that stuff has an effect on our net income. Because if we spent way too much money on those pens, if we bought them for 90 cents and sold them for 91, that's probably not going to cover our other costs, okay? So we want to know how much it cost us to sell these things. If we make a mistake somewhere in our inventory, then that's going to affect all other parts of our business, okay? If our ending inventory is understated, meaning we say we have a certain amount, but we actually have more, this is how it's going to affect each of these other statements that we produce, okay? So if we understate our inventory, if we say we have $1,000 when we actually have $2,000, then our cost of merchandise sold will be overstated, and everything else is going to be understated. So we're going to be undervaluing ourselves. And the reverse of that, if we overstate how much inventory we have, then our cost of merchandise sold is understated, so we're going to think we're doing better than we really are, and all of our other statements are going to be overstated, okay? Our equity, for example, we would not be worth as much as we say we are if we mess up on our ending inventory. It affects all these other parts. So it's very important that we have an accurate picture of our merchandise inventory. So both of these, this chart here, and then also this little diagram at the top of the page would be good things to put in your notes just as a quick reference, because you'll be dealing with them as we go forward. In the book, they're going to refer to our merchandise inventory as goods. That just means it's part of our inventory, all goods that we legally own. And the cost of these includes what we actually pay for them to begin with, okay? That's number one, the price that we actually pay to vendors, obviously minus any discounts or returns. But then also the cost that we spend to get them ready for sale, okay? So that could be transportation costs or other costs that we'll talk about as we go forward. But all the costs involved in getting that merchandise ready to sell goes into our cost of goods, okay? Not only do we want to know how much the cost of the goods are, but also how many specifically are in our inventory, okay? There's two main ways that businesses are going to do inventories. They're going to take a physical count. You would literally go out into the warehouse and count one by one all the stuff that we have, okay? Everything's dated, and you physically send people in the warehouse and you count it up. You do that periodically. The other way is that you keep a continuous record showing how much we sold, okay? That would be computer related, point of sale systems, when you sell something, it automatically goes into the computer system, and that way everything is up to the second accurate, okay? And then we don't have to take the time to go out physically and count stuff. If we want to know how many desks we have at any given time, we just look on the computer, bam. If we sold one 20 minutes ago, that's going to be reflected in our computer inventory. Another little wrinkle that they're going to add here is called goods in transit. This means goods, which is our inventory, and in transit means during transportation. So we buy them from someone in Kentucky, and they get shipped to us, okay? Who owns them at what point? When they leave our vendor, do we own them, or is it not until, excuse me, whenever the sale is made, the terms of the transit are going to be figured out at that time, okay? So you know ahead of time. One common one is FOB, stands for free on board. Means that the buyer, which would be us, we're going to pay all the shipping charges, the transportation charges, and it physically becomes our property once our vendor gives it to UPS or gives it to whatever the shipping company, the trucking company, whatever they may be. Once the vendor gives it to that shipping company, it's technically our inventory. We own it. We count it in our merchandise inventory. We're responsible for it at that point. Even though we haven't actually got it in our store yet, we're responsible for it. The reverse of that then would be at the top of the page here, which would be FOB destination. That means that the vendor, whoever we buy it for, they're paying the shipping charges. So it's not it's not technically ours. We don't have responsibility for it until we actually receive it in the warehouse. We check it off. We sign off on the shipping papers. Okay. So if there was a wreck on the highway or whatever, it would be the vendor's worry, and it stays in their inventory until we physically sign it into our inventory once we get it. So the two different ways we can do that there. FOB destination, excuse me, or FOB shipping point, okay? So know the difference between those two. Another type of inventory would be consignment. You've probably heard of a consignment store before. Sometimes thrift stores or craft stores, a lot of different places. Furniture stores sometimes work like this. A lot of times a small business or someone who creates something will then put it on consignment to a larger store so they don't have to run their own store. Basically what this means is a consignee, which would be the person that has the business or the shop, they're the consignee. They agree to let other people bring in their stuff, and we try to sell it for them, okay? If we're working on consignment, we're not physically going to put these items into our inventory. We don't own them. We're responsible for them, okay? There's a liability implied that if something were to get broken while it's in our store or stolen, we would be responsible for that, okay? But we're not going to put it in our inventory per se. It's still owned by whoever created it, the consignor. It's still owned by that original person, okay? We're just doing a service. We're trying to sell it for them. And then we would take a commission off that, a percentage of whatever it sells for, okay? But goods on consignment are not typically going to be added to our inventory, okay? On the next page, we're talking about a stock record. Think of stock in this regards not as like part of a business like you can buy stock, but stock as in how much do we have in stock, okay? So this is dealing with our inventory amounts here. A stock record is basically just a snapshot of our inventory. It's a form. It shows the type of merchandise, how many we got in, how many we sold, how many we still have on hand, okay? So this is a stock record. You see at the top here, this will show what the item is, the description, right at the beginning quantity that we have here, record everything that happened. We sold this many, we sold this many, we sold this many. There's our running balance, okay? And we purchased some more on March 7th, so that goes on this side because we have increases and decreases. So decreases in our stock would be when we sell stuff. Increases would be when we buy more, okay? And then down at the bottom, or excuse me, it goes in order, obviously. So January, February, March 7th, we bought more. We sold some more in October, okay? So it's just a running total, more or less, of this particular item. Also on the stock record on the top here, included in our description of what the item actually is, let's see here. So it's CDs, That's our stock number. It also has our reorder and our minimum points, okay? So our reorder means we're going to order 1,000 at a time when we get down to 300, okay? So whenever our inventory gets to 300, we're going to reorder 1,000 of them, okay? So it looks like on February 21st, we sold some and our inventory fell to 270. So at that point, we placed an order for 1,000 more, and it takes a certain amount of time to get those in, okay? For this particular unit, it says here that an order was immediately placed. The order is received on March 7th. So it took us, just about 2 weeks, okay? We placed the order here, we received the order here, so it's about a 2-week lag. So part of our inventory planning will be to know how long it takes for inventory to come in. They're going to tell you that for the book's purposes. And at the bottom of the page here, they just walk you through the steps of that again, okay? So this is just an example of a stock record. It's pretty self-explanatory, pretty simple. It's just kind of a running total of what we've sold and what we purchased for each individual item. Last part of this first section is what to do, or a form for a periodic inventory. Alright, sorry, I got messed up there. Okay, this is for a periodic inventory. So this would be when you physically go in once a year, once a quarter, whatever, to do a physical inventory. What we talked about previously for the stock record, that was for a perpetual inventory. Okay, so we're keeping track constantly. Okay, this sheet here, this last part, is for a periodic inventory. Even companies that do perpetual inventory, they may do a periodic inventory once a year on top of it, just to see if they can catch any mistakes that may have been made as they went through the year, okay? But what they use here is called an inventory record. They're physically going to send people into the warehouse, and they're going to count all the stuff, and they're going to mark it down on here. So basically what's going to happen is they're going to go in, you're going to fill an inventory record for each individual item or for each category of items, depending on how the company does their inventory. Here they have one record for all removable storage, which is their CDs and their DVDs, okay? So you enter in the date, the category, then they go in and they count, okay, how many DVDs do we have? It was item number this, or excuse me, CDs, item number this, CDs, we counted, we have 670 on hand. The price for us is $470 each, multiply that out, we have $3,149 worth of CDs. Do the same thing for DVDs, and then a total for this category, okay? Pretty simple. And that's it for the first section here on Chapter 6. You probably have the vocabulary done already. Just make sure you have those. Audit your understanding. 3 questions. What 2 elements are included in the cost of merchandise available for sale? If ending merchandise inventory is understated, will the net income be overstated or understated? You have a chart to look at that. For the first one, you have that little graphic. And number 3, name 2 ways to determine the number of inventory items on hand. Okay, so there's 2 different ways that we did inventory. What are those called? Pretty self-explanatory in their names. Go ahead and do the work together and the on your own, and I will be checking in on you.